Hello, today we are going to solve Jan 2025 paper question number 5. The treasurer of Ashmore Bowls Club prepared a summarized receipt and payments account for the year ended 31st December 2024, which is shown below. They are given receipt and payments account summarized. And then additional information is given. Ashmore Bowls has two categories of membership subscription: annual, where members are going to pay £50 each year, and no annual subscriptions are written off as bad debts. And there are also 10 years where members pay at reduced rate of £350 in advance for a 10-year period. And second is 10% of the 10-year member subscription account is transferred to the income and expenditure account. So what is the 10% of this is going to be transferred? So 10 percentage of 10% of 350 times 10, that is equal to 350 pounds is going to be transferred. It's going to be transferred to the income statement. So this is transferred to the income statement. This is what here this means. Then you have some balances given. And then the grass cutter, a non-current asset, was sold, and this one. So now first one, explain the terms. First, accumulated fund. Accumulated fund is a statement of assets and liabilities at the end of the year. And the accumulated figure is actually calculated when you deduct liabilities from the assets. So asset minus liabilities, current liabilities, it's going to give you the accumulated fund. It is acts as a capital figure for the club. Then we have the profit on sale of non-current assets. So profit on the sale of non-current asset, it will occur if the sale value is going to be more than the net carrying value of the asset, and the net carrying value is the difference between cost and its accumulated depreciation, right? So if it is, you are getting the value more than the cost minus depreciation, then you will get a profit. So using profit, you can purchase another new asset. Then calculate for the year ended 31st December 2024 the annual subscriptions. So let's calculate that. Now the annual subscription is an income account. So DR and CR, and then you write the pounds also. Now, so there is arrears 300 and 450 at the beginning. So this represents the advance. This represents the advance, and this will represent the arrear side. Owed side. So paid, prepaid on this side, and any owed or arrears will appear on the debit side. So 300 in arrears. So let's write that. So this was on 1st January 2024. 1st January 2024, the balance brought down. 1st January 2024, the balance brought down was 300 in arrears. Then on the same date, they had a balance BD on the credit side as an advance 450. So let's write that on this side, 450. Next we have, after that we have also the ending balances, so let's write that also. On 31st December, the arrears was 150. Okay, the on the 31st December, the arrears had become 150. And advances had become 400. Okay, so this is the same as balance carried down. Okay, so this is the same as 31st December 2024 balances. Okay, now we can see that the annual subscriptions were around 4100. So the receipt and payments account, okay, states that receipts and payment okay, so it is 4100. Now we'll have to calculate how much of it has to go into the annual subscription that should go into the income statement. This was received. Okay, they had some arrears and advance. There was some receipts that was received towards subscription. Now what actually should go into the income statement? Okay, we have to calculate. It goes on this side, income statement. Okay, so that will be the annual subscription that is going to go into the income statement. Okay, so when we add up here 450 plus 4100 plus 150, so the value is 450 plus 4100 plus 150, that is 4400. Okay, 4700. So let's write that. So the value is 4700. So the total has to be the same on both the sides, and then you subtract 700 from this. So the income statement that is going to have the value of annual subscription should be only around 4000, should not be the with the arrears and the advances subtracted. So the annual subscriptions, okay, for the year will be equal to £4000.